Steve Auth of Federated Hermes seeing more room for stocks to run under a second Trump term, writing the following: the coming Trump presidency is likely to be positive for economic growth and eventually for lower inflation and interest rates. All of this is stock market positive, particularly for large cap values, cyclicals, dividend payers and small caps. Basically everything, Steve. He joins us now. Steve, welcome to the programme, sir. I was reading through your outlook. If you're not a fan of chess, move on to the next election outlook, clogging up your desktop or your mobile phone, your smartphone inbox. I carried on reading. You said we're playing chess and not checkers. What do you mean by that, Steve?
Well, yeah, checkers is more of a short-term game. You're kind of playing one move at a time. In chess, you're playing 2 or 3 moves forward. And I think a lot of folks think Trump is playing checkers. I think some of them think he's not capable of playing chess. And if you just take the other side of that debate and argue that he's playing 2 or 3 moves down the board and think through what those moves might be, you can go down the whole list of his policies and come away thinking, gee, this is actually going to be pretty positive. So if you're a longer-term investor like we are, you know, we think the S&P probably gets to 7,500 by the end of 26. So, we think we've got a pretty good agenda here. And you can go chop your way down the list and see a positive outcome.
Well, Steve, let's go through the list. Tax cuts. You indicate focus on the growth and not the deficit. Tariffs, you suggest focus on the growth and not the inflation. Steve, can we sit on tariffs? Why do you think there could be a positive growth impulse off the back of that story?
Well, he is clearly here playing a chess game. I mean, he's pretty much said that, and he's negotiating, and I think people get that. So, the folks that argue that tariffs are just absolutely negative and inflation causing, they're playing checkers. They're just multiplying the amount of the tariff times the volume of goods being imported, and they feel that just carries through to inflation in effect. Trump is playing more the game that let's negotiate this deal and equalize the playing field. And the outcomes of all those things, if they work, we'll see, should be to bring more manufacturing back into the U.S., which is growth stimulative. It should bring in more volume into the U.S. He's going to get on the other side on deregulation, which is part of the picture. He's going to get more LNG exports. He's going to bring down the price of oil. That'll offset some of the price increases you will get with tariffs, but you won't get them all. The Chinese manufacturers, like they did the last time, will absorb probably a good hunk of the tariff increase out of their profit margins rather than raise price. They don't want to lose their competitive position. So it's not as simple as just multiplying the tariff times the volume. It's something a little more complicated. And my guess is he'll end up with more investment in the U.S. economy. We're already starting to see people move the piece on the board for that purpose. You're already seeing companies ahead of Trump starting to do that. So, I think net-net, it's probably growth positive, not growth negative.